Column iron ore desires China stimulus motion, no longer simply phrases. Russell Launceston. Australia iron ore expenditures have slipped for 3 straight weeks, with the decline reflecting an evaporation in self-assurance over China's financial stimulus, which in flip threatens to hit call for the metal uncooked cloth in coming months. Spot 62% iron ore for shipping to North China, as assessed by way of commodity charge reporting organization Argus, ended at $116.05 a ton on June 24, down 4.8% from the week before. The benchmark fee has declined 27.6% from its 2022 high of $160.30 a ton on March 8. That peak become driven by means of fears of deliver disruption after Russia's invasion of Ukraine, which become the 5th large street exporter of iron ore after Australia, Brazil, South Africa and Canada. While the Ukraine conflict rally became short-lived, iron ore did respond undoubtedly to signs that China might boost economic interest inside the wake of a chain of lockdowns of most important towns, imposed as part of its strict zero-COVID policy. But that optimism has been ebbing away amid symptoms that the important thing construction quarter, the principal customer of metal, is suffering to reignite, with new domestic expenses falling for a second month in May, and assets sales by way of floor region contracting 16.8% within the first 5 months of 2022 from the same length 12 months earlier. While there was a few recuperation in manufacturing, the iron ore and metallic sectors will be a great deal extra focused on property and infrastructure spending as a driver of demand. Iron ore did get a little pickup on June 23, when it bounced off a 7-month low of $109 a ton on June 22 to end at $116 after Chinese President Xi Jinping said his government would step up policy modifications and take extra effective measures to assist economic increase. That leap wasn't enough to make it a winning week for iron ore. As an alternative, it confined the loss. That is perhaps a signal that the market now wants to see exactly what steps are being taken before helping any sustained price rally. There are some questions over the Kingdom of China's steel output, which rose 4.1% in May from April, with the each-day manufacturing of 3.12 million tons being the highest due to the fact that June 2021. But May's figures are in large part a history lesson, and expectations are that gentle metal call for and falling earnings margins at metal generators will see weaker manufacturing in June and July. China, which produces about 55% of the world's steel, is also seeing rising inventories, with Argus reporting that stockpiles at primary generators rose to 20.5 million tons inside the June 11-20 length, up 10.7% from the June 110 duration and a few 38% above the same 10 days in 2021. Iron ore imports growth in inventories and softer metallic call for as mills carry ahead maintenance or reduce run rates is probably to result in slowing iron ore imports in coming months. However, there is little signal that this is taking place with June imports predicted to be more or much less in keeping with the ones in May. China, which buys nearly 70% of worldwide seaborne iron ore, is predicted to import about 93.7 million tons, in step with commodity analysts Kepler, whilst Refinitiv is tipping arrivals at a barely higher 96.2 million tons. Both forecasts are slightly higher than the official customs discern of 92.52 million tons in May, meaning a small increase in monthly imports is on the cards. However, it's worth noting that imports inside the first 5 months of 2022 had been 447 million tons, that's down 5.1% from the identical duration in 2021, a reflection that the steel enterprise is combating to rebound from the COVID-19 lockdowns. Overall, it seems that the iron ore and steel markets had been trading on the expectation that Beijing might deliver rapid and powerful stimulus, mainly inside the 2D half of 2022. While this could nevertheless happen, it appears marketplace members want to look real call for growing, in preference to officers speaking about it.